Prepare for more Bitcoin volatility. You better zoom out or you're going to get shaken out. Hey guys, it's Keith Allen. Hope you're having a good week, man. It's been a fun week for sure. And man, some big moves just happening in the order book really within the last hour or so. I probably could have come up with a more provocative title like, I don't know, maybe after a $70 million market dump, the order book has a brand new look. And we are primed for volatility as we head into the weekend and, quite frankly, the end of the month. Let's take a look at what happened and where we might be going from here and why I think this sets us up for more volatility. Okay, so obviously, we had options expiring today. Bitcoin monthly options expired, and we really didn't touch the boundaries. I posted a chart last night kind of highlighting those boundaries and some of the key levels. We could take a look at that really quick, I guess, and then we'll go into what has transpired since then, right? Because there was really a lot of liquidity within the active trading range that made it, I think, difficult to hit both the that $69-70 million range where there was so many out of the money calls sitting, and which incidentally closed out of the money, and that $64,000 mark, which was the max pain level. So let's get into some sharing here. There's our Bitcoin chart. You can see we had a big, massive dump here, but let's real quick just head over to Twitter or X or whatever the hell you want to call it, and we can take a look at that chart I shared yesterday. It seems to be something you guys like. So if you like more of this kind of stuff, by all means, let me know what you like, and I'll do my best to keep posting more of it. Here you can see our max pain level is 64K. The 2021 mid-cycle top, the 21-week moving average. Actually, this is a 21-day moving average, I think. The 2021 top up here at 69K, and where we had the highest concentration of out of the money October calls here. All of that kind of based on an article and a chart I saw from CoinDesk the other day that, let's see if I can zoom into this a little bit, that was showing us where the max pain level was. Purple is the puts, green is the calls, and you can see we had really the highest concentration of calls was up here around that 70K mark. And these, of course, all closed out of the money. In terms of the puts, a lot of guys got punished here, right? I mean, there's really a very small amount of in the money puts here. As you can see, the purple ones are puts. So that's all history now, because the October options have expired at this point, and we are now looking at we could look at the chart with renewed perspective that's no longer any cause for changes in the price action. You can see here our 2021 top at 69K, our 2021 mid-cycle top, and this is really the range that we're trading. Perhaps this 21 week. We're on the day chart. This 21-day moving average could get retested here, as could this mid-cycle top here. That's sitting right now at around 65K. Mid-cycle top is just sub 65K. The 21-day moving average is just above 65K. A retest here, certainly possible, as is, if we zoom out to kind of that broader range, which is really, I think, the range that we're still in, is the 21-week moving average, which is actually down here around 62.7K. You can see we had a number of candles that interacted with this level. None of them have had a full candle body, including last week's above this 21-week moving average. So now this week we're looking for a close above this 21-week moving average without a wick below. It would be the first one for that to happen. And of course, coming very soon. Today's the 25th, right? So we've got um, like a week, not even, for our um, monthly close. And this also would be the first opportunity to get a monthly close back above this 2021 mid-cycle top, and potentially higher. So we'll have to see how that all, pardon the pun, shakes out. Right. So now I want to show you what happened in the order book that was, I think, caught a lot of people by surprise, and I did not see. Um, I haven't been watching the news super close today, so if you guys know of anything that might have triggered this dump, by all means, please share it. Before I go any further, I just want to shout out to everybody who has supported me here on the Bit Break live streams. I appreciate you guys. If you haven't done so yet, please take a second to smash all the buttons, the like, the share, especially the subscribe button up there in the up top, that little bell up there on YouTube, so you don't miss any of these live streams. Live comments are also open if you guys want to chime in, ask questions, or share any insights. Game Zone coming in with a question: could price go deeper? There was a massive dump, very hard to absorb by buyers. Yes, that's a good question, and that's exactly what we're going to climb into here. Game Zone, I appreciate the follow, man, and the question. So let me show you what we saw here on Fire Charts. Big dump here. And, people see a big move here out of the Brown class and they go, oh my gosh, that was a lot of money. Well, all of these moves right here in this normalized view are just that. They're normalized. And each order class in this bin CBD is showing its moves up, up as buying, down as selling. These are market orders. And it's showing those moves relative to each individual order class. So basically what this says is, earlier today, that brown order class of mega whales was at their max level of buy volume for the week, and they've now sold upwards of 65% of that, and then they bought a little bit back. So now they're net about 60% down from their max on that time period. But we can switch this over to absolute CBD and see how that translates into cash money. And let's go to the daily chart, because that's where I think it was easier to see. Here's what it looks like in the normalized view: big dump, a small pump, and another dump, and then they started buying again. And you can see how this translated. So in that chart that I showed you earlier, we had a lot of liquidity in this zone. Well, at least a decent amount of liquidity in this zone that was making it hard to get down to this range, and of course difficult to get up to the 70K range, and certainly difficult to pass it. This one level right here is about 46.5 million yesterday. So I've been saying that for us to be able to pass through this, to break the 70K mark, we need to see some attrition here. We need to see some erosion of the liquidity up here in this upper part of the range. Did it just happen? Well, I don't know. I don't know that it all came from there. Let's take a look and see what we can visualize here. And as you can see, some did indeed fade out. Right. Yesterday we were upwards of 46 million. Now we are at what, 45 million. So only $1 million came off of that 70K level. That certainly isn't enough to do this, for this move. And as I was saying, when we switch to the absolute value, we can see what each different order class did and what the sum of all classes did. Right. So at this point, prior to the dump, that brown order class was up about 7 million on the day in terms of market orders. Then they sold. Well, they sold pretty much all of it, with the exception of about $280,000. And then they one buyback and then $1 million buyback. No great shakes out of the brown class there. I guess that, $6 million sell is significant. But if you look at the blue line here, this is the true CVD. This is the sum of all order classes. And what we can see is prior to that flash dump, that was up at about 25 million. negative 25 million. So all order classes, net were net minus 25 million in market orders, and that came down to minus 95 million in market orders. Do the math. That's roughly a $70 million market order dump, very very quickly from 1025 from 1750 down to 18. So in 15 minutes, 70 million in less than 15 minutes. Um, Pretty interesting. Now, I would have expected to see a move like this happen around that options expiry, but it didn't. So I'm wondering if anybody's seen any news that may have triggered something like this. What is okay? So I did see a glimpse of this Wall Street Journal exclusive crypto firm Tether is under federal investigation for possible violations of sanctions and anti-money AML rules. We've seen, how many times have we seen this FUD? It's been a while since we've seen this kind of FUD from Tether. Tether CEO apparently denied that, and you got to verify this stuff for yourself, guys. I'm looking at this live, so not don't have a chance to go through the verification process live, but we've seen stuff like this really as long as I've been in crypto. We've seen this kind of FUD around Tether, and I'm not here to weigh in on whether it is or isn't happening. But I can say this: in terms of how we trade, it doesn't really make a difference. We know what our levels are. We know what our invalidation levels are. We know what our targets are. So this is more FUD. It's more noise. It may develop into something much bigger, but at this stage, this is a distraction, right? And like, we need another distraction with the election less than 2 weeks away. What we're seeing here is just more of this great shakeout. We have obviously cleared out a significant amount of liquidity. And as I often say, liquidity dampens volatility. And if that is true, if we can all agree that liquidity dampens volatility, and by that I mean when we have high concentrations of liquidity, it dampens volatility because it makes it difficult, harder for price to move. If we can all agree that liquidity dampens volatility, then we can agree that a lack of liquidity or illiquidity amplifies volatility. And that is exactly why we were able to see this move, and a complete, U-turn too, by the way, right? People thought, hey, look, it's a V-shaped recovery, but guess what? It's breaking down. And so for me, if this 67K level isn't holding, and it doesn't look like it is, we're ripe for a retest here at this 2021 mid-cycle top. That's the 65K level. We had the 21-day moving average right here in this range. So between here, that's at 64.9 for the mid-cycle top, and we're at like 65, 100 something for the moving average. That would be an interesting retest, and holding above that 21-day, either of these levels at this point would be quite bullish in my mind. But in terms of what matters, I think the 21 week is more important. I think that at this stage in the game, you may be doing yourself a favor by zooming out a bit, maybe loosening up some stops. I'm not saying that you ignore them, but I'm saying maybe you don't run things so tight here, because you are in jeopardy of getting shaken out or liquidated. So in terms of heading into the weekend, we know that weekend, whale games are a thing, and we know that volatility around the monthly closure is often a thing. And we know that volatility around elections is a thing. So all things, for me, point to a good probability of more volatility between now and the monthly close, and quite frankly, the election. Now, all it takes is a big block of liquidity to dampen that volatility. But at the moment, we're pretty opened up to the upside in terms of liquidity, right? There's not a lot here. In other words, not much friction to keep us from going back up to this level. And there's not a ton of friction to keep us from going down here. How much lower could we possibly go? Well, that's a great question. Let's go ahead and zoom out and see where the bigger concentrations of liquidity are. And you can see that 65K level still is the highest concentration of bid side liquidity. Obviously, more to the upside on the ask side of the trade, but we've got a new $20 million, $19 million wall holding us down below 67K right now, trying to push things down here one more time and conceivably lower. Although I'd like to see things hold here above the 65K level. I think that would be healthy. If we go lower, I'm happy to buy down. And I'll tell you, as I mentioned this the other day, in terms of my targets, and gosh, you got to do what works for you. I did pick up a little bit on the dip the other day to this level. I would be happy to do so at this 21-week moving average if it should hold. And I would probably wait to see if it holds before I bought there. If not, I really like this 50-day moving average. You can see we had 50-week moving average. You can see we had a test back in August 5th. That was our first dump down to that 50, it went sub 50K. But when we look at it on a line chart, and I'll show you this, it actually recoiled back for a close around that 54K level, which is where we got this double bottom from. And you can see that was another retest of the 50-week moving average, a third retest here of the 50-week moving average. And so that would be a sound place. That's it. At the moment, that is hovering around 58K. Now, not a lot of people want to see that breakdown right now. And nothing says that any of these levels have to hold. If this level did not hold, I would obviously then go to the trend line, and the trend line, which began back at the FTX crash in November 2022, to me is the strongest spot on the chart in terms of potential foundational support for the next leg up. And as far as I'm concerned, fundamentally, things are strong enough for me to think that we will still see a new all-time high sometime during 2025. Obviously, there's a lot of speculation over the election of who's going to win, blah, 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 noise. Yes, there will be a knee-jerk reaction to the election. I think we all know where the crypto loyalists are. And, but something to consider, you look at these Polymarket polls, for example, American voters can't participate in Polymarket. It's actually not permitted here in the U.S. So even though those they've got offices here in the U.S., that's not American voters placing those odds. So all of you speculators around the world can bet all you want. But that's not indicative necessarily of what the voting population is doing. So I wasn't really aware that Polymarket was not available to Americans until just this week. So that was some insight for me that I found eye-opening. Whatever the case may be, we know that the crypto market is who the crypto market is aligned with, and if that guy wins, then we could probably expect a short-term spike in prices before things settle down and get back into the normal trajectory. Likewise, if Kamala Harris wins, then it's largely believed that we'll see another pullback in price. But I believe, and a lot of other analysts believe, that once the dust settles on this election, and whomever wins takes office, that price is going to normalize and go back to whatever trajectory is meant to be for Bitcoin. And I think most of us know what that trajectory is. In case you're wondering, it's up. So with that, I'm going to give you another shot at another look at the order book here before we close this out. You can see we do have a nice ladder of bids up from 65K. So it's not just what's there. and gosh, I think some of this just kind of came into place here while we're sitting here on the live stream. So there's 22, 23, another 22. That's 44. We'll call it 45, 55, 60. Another 20 million there. So things are stacking up here, that can absorb. Number one, can absorb and some of the dumps if we get another dump. But what you want to see is another bright spot, right? You want to see a nice heavy concentration of bid liquidity to send us back up like we had down here, right? And so we do have depth all the way down sub 50K. We actually have depth all the way down sub 40K, right? Down to what, 38K? We have some bids, about 11 million down there. But what you want to see, if we are to get, stay on this trajectory, you want to see this double bottom, this lower low protected. And in the near term, it would be best if this low gets protected and this double bottom gets protected. So, and you can see liquidity moving as we speak here, right? So we've got a concentration here in the 65, 66K range. And as we move back into tighter time frames, we can see a little bit better what's happening here. All right, so that's building 46 million now. And what's up above? About 49 million. So the fact that this is starting to gain strength here is a good sign. And what we want to see ultimately is the bid side get brighter than the ask side. So we may start to see more ask liquidity fade down into the active trading range, and that would help erode some of this up here. Whatever the case may be, I think we're in for some volatility here through the weekend. You can see this is starting to open up a little bit, down to this 65K range. If the 65K range held here through the weekend and through the monthly close for that matter, I think that would be pretty solid. But again, no guarantees. Hey, Simons, howdy. Glad to have you with me. Appreciate you guys coming to join me here and supporting the live stream. Sylvester, thank you very much for your insights analysis, and thanks for following along. I appreciate you, man, and thanks for sharing your insight on the Tether story in the Wall Street Journal. Alexander, my man, always good to have you with me. Have a good weekend to you. All of you have a great weekend, man. I got a weekend of football. Unfortunately, my teams haven't been doing too well this season, but my oldest is home from college, and she goes to my alma mater. So our team is playing our home team here. It's a big rivalry. So looking forward to that game on Saturday. And then Sunday, my Miami Dolphins are playing, and our quarterback is coming back after like an 8-week injured reserve after concussion. So whatever the case, I'm looking forward to a good weekend with friends and family. Hope you spend some time doing the things you love with the people you love as well this weekend, and just be prepared for some volatility and know that it is likely going to spike around the Sunday close, around the monthly close, and of course, around the election coming up on November 5th. Going to leave it right there. And with one last shot of the order book here, you can see we have thin liquidity to the upside up to about 68.6, and things are thinning out down to 65K, and you got some pretty good space below that too. So we could certainly, we lose that 65K level, we're certainly going lower. But I think just based on what I'm seeing right now, obviously this can change in an instant, but what I'm seeing right now, it looks like we're getting enough that might at least insulate us through the weekend, or at least until we get towards the closes on Sunday. And then what day is the monthly close? And what info do we have to be looking forward to next week that might shake things up even more? Let's see. Economic data coming in on Monday. Meh. Tuesday. Redbook's always interesting. Trade balance is good. Jolts we'll be looking at. And Wednesday, GDP will be a big one. Core PCE, also a big one. And then as we round out the month, core PCE, personal income, Um, all of this is kind of a big deal. PCE year over year, job claims. Thursday, the end of the month. This is going to be big, man. We're going to have a lot of volatility around this, being the monthly close and all. And then, of course, we have um, non-farm payrolls and unemployment coming on next Friday. So a week from today is the probably the biggest numbers that Fed watchers are looking at. And then, of course, election day is Tuesday, November 5th. So that's the deal right there. Alex with one more shot. What's it? Alex prefers Major League Baseball. Well, it is. Hey, 'tis the season, right? We got World Series action happening. Um, so there's that. There's something for everybody, right? Again, I'm gonna leave you with a parting shot of the order book here on fire charts. Let's just tighten up here for the moment. Look, just know what your invalidations are, right? If you're trying to find opportunities to stack, we're still in this range, this consolidation range, and historically, these consolidation ranges are good areas to dollar cost average. So you got that going. Just know that things could break down further before they get a real breakout to the upside. And with that, I'm going to say, have a great weekend, my friends. And as always, trade safe.